Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today we are going to cover Texas Instrument. This is out of the information technology sector. It is July 26th. Let's jump right in. If you want to know more about the company, check them out at their homepage, www.ti.com. What we do, for decades we have operated with a passion to create a better world by making electronics more affordable through semiconductors. We were pioneers in the transition of the world from vacuum tubes to transistors and then to integrated circuits, ICs, and we've been advancing IC technology and the ability to reliably produce ICs in high volumes for decades. Each generation of innovation builds upon the last to make technology smaller, more efficient, more reliable, and more affordable, making it possible for semiconductors to go into electronics everywhere. We think of this as engineering progress. It's what we do and have been doing for decades. You can go ahead and read through the rest of here. There's a lot more information on their homepage. You can go through their history a little deeper into the products that they make. It's not just electronics. They do calculators. Obviously, electronics is their bread and butter. That do have their hands in some other avenues, automobiles, so a lot of their chips and other products go into a lot of other industries outside the technology sector. Let's keep on going. Now, the reason we are taking a look at them today, down 5.42%. I always look for big drops on the day so we can see if we find any value out there. We are talking about Texas Instrument Incorporated, ticker TXN, again out of the information technology sector. They are a semiconductor and electronics manufacturer. Closed the day out at $176. 52-week range as low as $145.97, as high as $188.12. They are closer to their 52-week high than they are their 52-week low, even with this big drop here on the day. Average volume of 5.1 million. Today's was 11.3. And obviously, pretty much, even though it looks flat, was a sell-off from start to finish. Market cap of $159.808 billion. So this is a large cap company here. Beta of 1.01. So just ever so slightly more volatile than the overall market. Price to earnings PE ratio of $19.75 per share. A little elevated in my opinion. I would like this back down in the 13 to 14 range, even lower if you could. EPS earnings per share is nice, $8.91 per share. That's a very nice number there. Earnings date coming up October 23rd through the 27th, sometime in that range. For dividend, $4.96. They are quarterly payers, so divide by 4, but we will see that here in a minute. So just hold on and you'll get to see it. You won't have to do the math. The dividend yield, 2.67. Nice dividend yield on this one. We'll see how fast it's growing here in a little bit as well. Ex-dividend date, July 28th. So we are quickly, right? If you were buying them today, well, we're out of the market today, but if you were to buy them tomorrow, you would be in line for their next dividend date, next dividend payout. You always want to buy the day before the ex-dividend date, so it's recorded on the ex-dividend date. That is the day that they record who owns the shares, and you want to buy them the day before so that you make sure you are the owner of record. 1 year target estimate, at least according to Yahoo Finance, $182.28. So they see some slight, ever so slight appreciation in the stock price here, a little over $6 per share. Not a ton. It's an awful lot of money to be investing for only a $6 return over the next year. Now, I like to look at statistics so we can look at dividend yield theory. To do that, we go over and we look at the 5-year dividend yield average of 2.55%. We compare it to its current 2.67. Same over here, forward annual dividend, they're the same, 2.67. And if it is higher, which it is slightly higher, that speaks to some undervaluation here. So even though they are up against their 52-week high here, they are slightly undervalued, though I don't know how much I trust this here. We'll see how fast their dividend are growing. This one here, I would question a little bit and maybe even do a discounted free cash flow on this one just to see where it comes out at. They do have a low payout ratio, 53.65. Well, let me jump back to here. According to dividend yield theory, this one is slightly undervalued. That's just the fact. Payout ratio, 53.65% here. So plenty of room to continue to raise the dividend over time, pay down debt, make acquisitions, reinvest into the company, right? That's what we want. I like 75% or lower, so this fits that criteria. Now, another one we want to look at, financials. Under financials, you'll find a lot of information. You'll find their income statement, their balance sheet, revenue, their debt, whether they're buying back shares. A lot of information. You want to get in there. You want to look at their assets. to liabilities ratio. Do they have enough assets to cover their liabilities? Like I said, are they paying down debt, growing revenue? But free cash flow is what we're going to look at here, because we want growing dividends. And to have growing dividends, you need growing free cash flow over time. So that's what dividends are paid out of. So 2019, 5.8 billion. 2020 down slightly, 5.4, up in 2021 to 6.2, down again in 2022. Overall, from 2019 to 2022, 5.8 to 5.9. I would really call that flat. They do have a little bit of up and down here, but it's not necessarily growing, slightly growing, I guess I'd say. Even though there was a decrease, you'd want to watch this into 2023 here. Currently, they're saying 5 point, but that's last year's number. So we want to see what's going on here to see if it's growing or if they are decreasing. If this was to continue from 2021 to drop in 2022 and then dropped again in 2023, might be a bit concerning. But again, from 2019 to 2022 overall, I would just call this flat. They are repurchasing stock, so that makes you more of a shareholder. Even if you don't buy any more shares, if you own the stock, every time they buy back shares, you own a little bit more of the company here. Now, another site that I like is stockanalysis.com. I always recommend more than one source so that you can back check the information that you are getting is correct. And they have 17 stock analysts that have taken a look at this. They call it a consensus buy, though it is right up against the hold there. And really, for me, this one would be a hold. I would want more of a pullback towards its 52-week low. Like I said, they are pretty close to their 52-week high, even though dividend yield theory says they're slightly undervalued. Now, they have a low estimate of $160. That would be a 9.12% decrease from where it currently sits, and I would love them much closer to this 160, even back in the 150 range. Average estimate of $189.82. That would be a 7.82% increase, and that's pretty much in line with what we saw with Yahoo Finance there on the previous page. And if it happened to hit their high estimate of $230, that would be a 30.63% increase in the stock price. All the while you were waiting, you could collect that 2+% dividend yield, 2.7%, 2.6% dividend yield there. Now, this gives you the same information, just in a different format, and actually goes back a little bit further. If you were to go back in financials, you can see revenue further back. You can see their debt, all that same information, their balance sheet, assets, liabilities, you name it, it's all under there. You're going to get the same information. Just this one goes a little bit further back. Statistics is one I like to look at. Forecast is what we just looked at here. Statistics, I like to look at return on equity and return on invested capital, but there is other information under here that tells you their margins. It gives you some forecasts on their earnings per share and their forecasted revenue. So good one to look at as well. Financial statistics, definitely want to get in there and check that out. But let's look at return on equity, ROE, and return on invested capital. I like 10% or better for both. So as we can see here, return on equity is at 10.8%. So right up against where I like it, just a little over that 10% threshold I like. Now the return on invested capital is a little lower than I like, 6.25%. So mixed bag here. Return on equity good, return on invested capital a little low. Let's see what's going on with their dividend. Same payout ratio, 59.47, so lots of room to expand this one over time. Again, I like 75% or lower. They do have dividend growth of 7.83%. That is very nice dividend growth for a company like this with a, in a 50% payout ratio. Again, lots of room to increase this. I went back to 2020, 90 cents back in June 2020. They jumped it up to $1.02 in October 2020. They rode that $1.02 till October of 2021. And probably increase it again. Yep, in October of 2022 up to $1.24. So again, this one looks like they raised their dividend on that October time frame, right? That is one of the reasons I like to go back and look. If they're going to raise it, when can I expect it? That is what I'm showing you here. Not just that they are raising it, right, by 7.83%, but when can you expect that raise? So looks like sometime in October, if they're going to continue that dividend raise, that's whenever you'll see it if you are a holder. And if you do hold Texas Instrument down there, let me know in the comment section how many shares you have, how long you've held those shares, how's it doing for you, what's your cost basis. Would love to hear from you on this one. So this is the vested interest stock screener. This is how I set up the videos, how I review a company to see if I want to add it to my portfolio. It must meet 4 of the 7. If it is a financial company, then it must meet 5 of the 8. I add in price to book for financial companies. You can pause this and go through this, trying to keep these as quick as possible so these are supposed to be quick hitters so we can see if we can find some value in the market here. Well, that is it for Texas Instrument. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. Stocks like this, stocks we're looking to buy, stocks we see value in, stocks we're avoiding, tips and tricks that we can share along the way. You can't benefit from my investing, but you can benefit from my experiences, mistakes I've made, things I've done correctly. I will share that all in this channel. I do these stock pick of the day series Monday through Thursday. I show my portfolio on Sunday mornings. My dividends paid out monthly. I'll show you all that, any options I'm in as well, anything I'm buying, selling. It's all out in the open here on this channel. That's what we do. Like to be as open as possible and transparent as possible so you can see how a real dividend portfolio is built out over time. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some stocks you'd like me to cover in the Stock Pick of the Day series, go ahead and drop them down in the comments section below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't money to never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek legal advice counsel by a certified financial advisor.